If you focus solely on your home market, you could be missing valuable wealth opportunities. Welcome to Money Gainers Hub, the channel where smart money moves become simple. We break down personal finance wisdom, including earning, saving, wealth building, and investing into powerful and practical tips, so you can make smarter money moves fast. Grab your notebook, get focused, and let's unlock your next financial breakthrough starting right now. In this video, I'm going to discuss international ETFs because international ETFs can enhance your portfolio globally. It fosters long-term wealth across different economies. Many investors limit themselves to their local markets. Why you should consider global investing? Because the global economy has far-reaching prospects beyond one nation's borders. Incorporating international ETFs into your portfolio can enable you to minimizes your investment risks, allows to enter rapidly growing markets, acts as a shield against economic challenges in your own country. Hence, the entire world is a potential opportunity zone. You just need to know where to look. What are international ETFs? International ETFs are funds traded on exchanges that invest in companies based outside your home country. They simplify global investment without the need to select individual foreign stocks. Some international ETFs target developed areas like Europe and Japan, while others focus on emerging markets such as India, China, and Brazil. Additionally, some ETFs provide exposure to entire regions or continents. What are the advantages of international ETFs? Advantage number 1, diversification. Decrease reliance on a single market. Advantage number 2, growth opportunities. Certain international markets often outpace growth in the US or Australia. Advantage number 3, currency protection. Holding foreign assets can safeguard your purchasing power. Advantage number 4, stability. ETFs from developed markets can offer stability during local economic downturns. What are the top international ETFs for long-term growth? Let's examine some of the leading international ETFs suitable for long-term investors. Leading ETF number 1, VXUS or Vanguard Total International Stock. It encompasses both developed and emerging markets. It has over 7,000 stocks globally, and it is an excellent core investment. Leading ETF number 2, VEA or Vanguard FTSE Developed Markets ETF. It concentrates on Europe, Japan, and developed Asia. It is low cost and wide-ranging exposure. Leading ETF number 3, VWO or Vanguard FTSE Emerging Markets ETF. It targets nations like China, India, and Brazil. It is more volatility but also greater growth prospects. These 3 ETFs are cost-effective, well-diversified, and accessible for long-term investors. Looking to focus even further? So consider these ETFs for more specific international investments. These additional specialized ETFs are number 1, EWJ or iShares Japan ETF. It ideal for exposure to Japanese tech and manufacturing. Specialized ETF number 2, EWI or iShares South Korea ETF. It involves heavyweights like Samsung and other tech leaders. Specialized ETF number 3, INDA or iShares India ETF. It invests in one of the globe's fastest-growing economies. Specialized ETF number 4, IEMG or iShares Core MSCI Emerging Markets ETF. It allows broad exposure to smaller companies in emerging markets. How much to invest internationally? Experts suggest allocating between 20% to 40% of your equity portfolio towards international stocks. For younger long-term investors, even higher allocations are acceptable. You can implement a 3-fund portfolio strategy like this. Fund number 1, domestic or U.S. total market ETF. Fund number 2, international ETF like VXUS or VEA. Fund number 3, bond ETF, for additional stability. This strategy ensures you benefit from global growth while also enjoying protection. What are the steps to purchase international ETFs? Purchasing international ETFs follows the same process as buying any other ETFs. Step number 1, open a brokerage account that offers international ETFs. Step number 2, search for the ticker such as VXUS, VWO, or VEA, etc. Step number 3, execute a buy order. However, if you are going to make a small initial investment, fractional shares allow for that. These kind of ETFs are available on major exchanges like the NYSE or NASDAQ, making them accessible for most investors globally. What are the risks to consider? International investing does carry some risks, hence be aware of it. So, risk number 1, currency risk. Your returns may fluctuate due to countries' exchange rates. Risk number 2, political risk. Emerging markets may encounter instabilities. Risk number 3, regulatory differences. Corporate governance standards vary from country to country. However, international ETFs provide a safer alternative to selecting individual international stocks by distributing risk across numerous companies. For true diversification and long-term growth, it's essential to acknowledge global opportunities. International ETFs such as VXUS, VEA, and VWO allow for easy access to global markets with minimal effort. Integrate them into your portfolio, invest regularly, and remain committed. If this video was helpful, please like, subscribe, and watch our next video.